Chapter 2 illustrated the absorption costing approach to calculating product costs in a job order costing environment. Recall from Chapter 1 that manufacturing a product, such as a car, involves three types of costs: direct materials, direct labor, and manufacturing overhead. Direct materials are raw materials that can become an integral part of the finished product and that can be physically and conveniently traced to the product. Direct labor consists of labor costs that can be easily and conveniently traced to the product, while manufacturing overhead consists of all other manufacturing costs. Costs such as utilities, maintenance and repairs of equipment, depreciation on the factory and equipment, insurance on the factory, supplies used in the factory, and supervisor salaries. In a job order costing system, we charge direct materials and direct labor costs to each job as work was performed. These costs were recorded on job cost sheets. Overhead costs, which could not be easily or conveniently traced to specific jobs, were allocated to jobs using a single plant-wide predetermined overhead rate, which was multiplied by some actual level of activity, which was our activity base. So again, direct material and direct labor costs are traced directly to jobs as they move through work in process to finished goods and eventually to our income statement as part of cost of goods sold. While manufacturing overhead costs, which by definition are difficult if not impossible to trace to specific jobs, are allocated to jobs using our predetermined overhead rate and an activity base, or actual level of activity. The predetermined overhead rate was based on estimated total overhead costs and a single estimated activity level or base. Common activity bases for allocating overhead costs when using a single predetermined overhead rate included things such as units of output, direct labor hours, machine hours, or perhaps direct material costs. While using a single plant-wide predetermined overhead rate, as described in Chapter 2, is simple, it may inaccurately assign cost to products. Activity-based costing is an alternative approach that attempts to more accurately assign overhead costs to products for financial reporting and other purposes. The idea behind activity-based costing is really rather quite simple. Rather than using a single overhead pool, we will slice our overhead pool into multiple segments and allocate overhead costs with each of the smaller cost pools using separate activity bases. This results in multiple predetermined overhead rates, or multiple predetermined, what we often call activity rates. Each of the smaller slices is referred to as a cost or activity pool, and the overhead cost associated with each slice is allocated using a separate allocation base. The result is multiple predetermined overhead rates, and hopefully more accurate product costing. Keep in mind that tracking and allocating cost is expensive, so we need to hire more accountants if we use more cost pools. So the challenge is to select a reasonably small number of activities that explain the bulk of the variation in our overhead costs. In this particular illustration, we can see that we've sliced our cost pool into 6 different slices: labor-related cost, machine-related cost, machine-related setup cost, production orders, parts administration cost, and then sort of a catch-all of general factory overhead for all of our other types of costs. Each one of these cost pools is then allocated on a separate allocation base. Let's look a little more closely at our activity-based costing. We calculate an activity rate for each of the separate activities by dividing the estimated overhead cost by an activity rate, and we get, for example, if the estimated overhead cost associated with production orders is $3,150,000, we would divide this by the estimated number of production orders, which is 1,200, and we would get a resulting predetermined overhead rate or activity rate of $2,625 per production order. It's important to remember that the flow of cost through raw materials, work in process, and other accounts is the same under activity-based costing as it was in Chapter 2 when using job order costing. The only difference is that in activity-based costing, we use more than one predetermined overhead rate to apply overhead costs to products and/or jobs. The goal of activity-based costing is to provide more accurate answers to our questions: are we profitable, and is this job or product profitable? Activity-based costing will allow us to more accurately allocate overhead costs across jobs and products. In addition, the process of implementing an activity-based costing system will force us to more closely examine our overhead costs and the drivers of those costs.